Welcome everybody back to Kingdom Wealth Creators, and we want to thank you for all the questions that you are sending in. And I want you to know that we are trying our best to answer these questions so that people around know what's correct. And so today we have a question on what do we do in a volatile market? Well, the answer to that is I think the first step that we got to do is to make sure that we stay calm. Okay, when the market is going up and down, it is so difficult to make a decision. You might get frightened, you might get scared, you might get emotional, and the answer there is to stay calm. We calmly make decisions based on the market trends. We do not make emotional decisions. I can give you an example of this. Say a share or that you have is suddenly going down, and you ignore the market trends because it indicates that it's reaching a level of support and it's going to come back up. But because you panic, you just sell it, and eventually, just a few minutes later, you can see it going back up, and you end up making a loss. So first of all, make sure you watch the trends, you are aware of what the resistance and supports are, and you calmly make the decision. Do not make an emotional decision. Secondly, you need to be a trend trader. Now, many of us have this tendency that we prefer to go long, we like to be a bull, or we prefer to go short, we like to be a bear. But I want you to know, in a volatile market, it's not whether you have a preference to be, to go long or a preference to go short. You got to go with the trend. You watch the trend, and then you go short or go long, depending on the trend. And now you can pick the trend that you want to pick up, but make sure that you follow the trend. For example, yesterday was a very volatile market, and it went up and down, and I followed the trend of going long on a few shares. And out of 21 trades that I did, 16 of them were right and only 5 went wrong. And so I want you to know, and that was a strike rate of 76%, which is very high. I just want you to know that in a volatile market, you can't be a bull or a bear. You go with the trend. All right. And the third thing is you need to utilize all three methods of trading when it comes to a volatile market, because you got to make sure that if you have you are invested long term, you got to make sure that if the trend is against your long term stock that day, if the market trend is against a particular stock, you can short it and get it back later. For example, 3 days on Monday, IRCTC, which I bought at about 1,800, 1,200, it had gone all the way up to 1,400 plus, and I realized that hey, the market trend was against IRCTC. It was breaking its upper circuit, it was going back down, and I sold it at about 1,406. And today it's back down to almost 1,310. And so I want you to know now it is a good time for me to get back in. I will watch the share once more to see where the trend is going, and then get back in. So if you are holding a long-term stock, make sure if the trend that day is against you, short the stock. It is okay, and try to recover it at the end of the day. If you got to make use of the swing trading. Some shares would be cutting their resistance or cutting their supports, and they would form a trend line, and they would be best to go for a swing trade, and you got to make use of that. You can't say, oh, I'm not going to get into the swing trade simply because the market is the other way around. No, sometimes a share can go up even when the market is going down, and you got to identify such a share and get involved if that is following a swing trade. And for intraday trading, very simple. You got to follow the market trend for that particular share on that particular day, and you watch the trend carefully. If you see a trend emerging, you get in and you make a profit. Don't stay on it for too long. And just like I showed you in a previous video of the 21 trades that I did, I would get in, get out very quickly, 2, 3, 5, 10 minutes. That's it, max. And in between that time, I would make a profit about 4 to 5 to 6 to 10 rupees per share, and that's it. I wasn't interested or bothered on where this share was going in the next 3-4 hours. I was only interested in what the share was going to do in these next 10 minutes, and that's what I did, and I made money. So I want you to know that in a volatile market, we got to make sure that first of all that we stay calm. Second of all, we make sure that we follow the trends and trade according to the trends. And third, and most important of all, we got to utilize all three methods of trading. If you're going long, and if it's a volatile market and your share is probably going down, short it and recover it later. You should get into swing trading if you see such a share emerging, even though the market is volatile. And finally, for intraday, do not risk positions for long hours. Get in, get out very quickly, short periods of time, so you can make money. I hope this helps you in this volatile market.